various reports out there suggesting that there will be increased interest towards safe havens like gold, and which has been the case earlier to this as well during the Russia-Ukraine war, which is when you saw more and more people going towards gold, buying that crucial commodity where people expect there'll be less volatility.
Absolutely, Shweta, and I think the real spike that we saw in gold was again in 2020 COVID. So anytime there is a shock to the stock markets, stock and gold move in opposite directions. When there is this irrational exuberance, euphoria in the stock markets, people want to invest in stock markets and try and maximize their returns. That is when you see gold actually staying flat or sometimes even going down slightly, though it doesn't over time. Gold has not gone down, it only continues to rise. And then we've seen anytime there is any economic uncertainty, any black swan event. So, the financial crisis of 2008 being one, COVID being another one in 2020. We saw the Russia-Ukraine war in 2022. And now again, we are seeing Israel going to war against Hamas, Hamas striking Israel, Israel retaliating. Anytime there is any sort of a shock in the stock markets, gold becomes a safe haven. Now, there were reports still, a couple of weeks back, which was suggesting that gold may not continue to be a safe haven anymore. This was at a time when there was no inkling of the Hamas-Israel outbreak. But one assumed that perhaps, the US dollar would be a better hedge if you really wanted to get out of stock markets, because stock markets come with volatility. But US dollar, given despite the inflation, despite other concerns in the US right now, slowdown in consumption, the dollar index has continued to rise. So there were reports suggesting earlier that US dollar might be a better hedge against gold. But what we are seeing last few days is that the interest in gold is renewed again. We've seen the war break out between Israel and the Hamas terrorist organization. 4 days of bombing, we are in day 4 today. And we haven't really seen any signs of the war de-escalating. Now, for once, it seems that while markets have also corrected, Indian markets have corrected, and globally also the shock that one would have expected from the war to deliver has not really been delivered. Despite that, there seems to be a renewed interest in gold once again. So it seems like the safe haven definition of gold is not yet outdated, and it continues to be a safe haven for investors.
And if you safe haven, let's quickly also get in Kunal Shah because he's with us. We'll look at the price charts thereafter. Head of Commodities Research, Nirmal Bang. Kunal joining us on the show. Thank you so much, Kunal, for taking time out. I mean, we'll look at the price chart, but interestingly, gold prices after hitting a 7-month low, once again inching up. Start of Monday, what are the prices in anticipation in this during the entirety of this week? What sort of upward movement are you expecting?
Well, in line with what you guys were discussing, gold is right now in a structural bull run as per us, and it is more of a strategic investment rather than just a normal investment, because we are already in a scenario where a sort of Cold War sort of scenario is emerging globally. If you see what is being happening on the geopolitical front, if you see what is being happening on the monetary front also, so the monetary base of the global central banks have expanded and the global debt have ballooned like anything. So anything goes wrong, what is your hedge? Like we saw it in this recent geopolitical turmoil. Gold prices shot up by almost $70 in a matter of 2 to 3 days. So we continue to remain bullish even for the week and even from the longer term perspective. And we are of the view that in near term, $1,900, and on a longer term, gold is heading much higher. We are of the view that $1,750, $1,800, these are the rates we are not going to see for quite a long time. So the gold is about to shift and move towards a new orbit going forward.
Okay, and this new orbit will also then raise concerns on the stock markets. Would it, Kunal? Because so far we've seen that stock markets and gold are inversely proportional to each other. But if you're saying that there is going to be a renewed, price hike and renewed interest in gold, will it mean that stock markets, on the contrary, will then continue to trade flat? If anything, perhaps even go down. Despite the war, we haven't yet seen stock markets, react the way one would have expected them to react. But you're saying that the renewed interest in gold would continue, but would it happen at the cost of investing in stock markets?
Well, I'm not a stock market expert, but what I'm able to make of is that this environment geopolitically and even from the what's happening in the global bond market, what's happening on the global monetary front, everything is pointing towards a one scenario that the growth going forward is going to take a hit. And that's not a very good news. But the markets can still, like you use the word irrational exuberance, market can still surprise you on the upside because the kind of money which has been printed in last 4 years, 3 years, the lag effect of that will continue to drive various assets. And that is one of the major reasons why, in spite of massive monetary tightening, in spite of massive hikes, interest rate hikes globally, the global stock markets have done fairly well. But what about going forward? How it is at some point, it is going to break some or the other things, and that time gold is going to go up exponentially. So I am not predicting any major fallout in stock market. But all I want to say is that going forward, the upside from the global growth point of view seems to be limited with whatever headwinds going on globally. And we believe that investment like gold, recently we have seen a good correction, good fall because of the rising yields. But the intrinsic value of gold is going to rise exponentially. And at this time, for everyone who is associated with the financial market, gold stands out to be a strategic investment.
But let's look at two scenarios here, Kunal. One scenario being that the war is indeed going to be a short-lived one. There is going to be intervention. There is going to be de-escalation. And if that happens, let's say about a week or so from now, by which time gold may have touched its, its at least monthly peak or, this quarter's peak. Thereafter, if there is de-escalation in global tensions in the Middle East, then we would see a fallout in terms of the loss to investor wealth, because gold prices would come down. Scenario 2 being that if the war continues to be a prolonged war, which we've seen in the case of Russia and Ukraine, we've seen over the last 1 year, gold prices have been pretty much flat. We've seen a little bit of up and down, but we haven't seen the kind of surge or the kind of decline that one saw, let's say, during COVID or any other black swan event like the 2008 financial crisis. So in these two scenarios, the war being short-lived as scenario 1, scenario 2, the war being an extended long period war, is how does the investment into gold as a hedge work across these two scenarios?
It's a very good question. So the first scenario, let us say that in a week's time or a 15 days time, the war is basically moderated and you come to some solution. And so in that scenario, $30 to $40 or maybe perhaps $50 of premium, which is built in gold prices, that will erode, and there will be a downside in gold. So that is one scenario. Second scenario is the war continues, then obviously gold prices are going to go up. So there's no doubt about it. And the third scenario, which is emerging, that let us say there is a peace talk or there is some positive resolution, then we come to a scenario of what is going to happen with the rates, what is going to happen with the inflation, what is going to happen with the global monetary policy. So if the rates, right now gold prices are not able to go up is because of the interest rate. So if I'm a US citizen, I'm getting 5.5% interest rate in my savings account. Why should I invest in gold? Gold is going to give me returns of 9 to 10% on an average. So the appeal for gold is being eroded. But interestingly, in history, whenever we've seen such kind of massive interest rate hike, it is generally followed by a crash in gold prices. So this has been an exceptional year. In spite of 5.5% rate hike by the US, gold prices are still at $1,850 from the peak of $2,000. So gold ideally should have been at $1,600, $1,500 in this kind of rate hike cycle. Right. But the monetary base of all the global, especially the G3 central banks, have expanded to the skies, and they are not going to go back to the previous pre-COVID balance sheet levels. And that remains the base case scenario for us to remain gold. So any asset you try to find a valuation, whether that asset is undervalued or overvalued. And looking at the way the balance sheets of the Western central banks have expanded, gold is highly undervalued. So we are of the very firm view that 1780, 1770 should be the bottom for gold. Okay. And next year, it is going to test $2,300 to $2,400.
Okay, and gold versus US dollar, what would you advise investors at this stage? Doesn't the US dollar seem like a better hedge against the volatility than gold at this moment? Given that we don't know which of the three scenarios in the war are going to pan out.
Yeah, so the beauty of the market is that, there was a time 1 month back, everyone was talking about de-dollarization. Dollar index was in 99, and suddenly dollar index is back to 107. So this is the beauty of this electronic markets. The general consensus is always defied, and that is what we've seen. The long-term view of the dollar with so much debt around, US cannot increase rates significantly, or US cannot keep these rates higher for longer. That is our narrative, and we believe that somewhere in the first half of the year, there will be next year, there will be indication of rate cuts. They cannot, because the
But
bond
Kunal, for
yields
that
recently.
you're looking at scenario one, that the war is short-lived. If the war is long-lived, and if we see the kind of impact on crude, that is going to weigh in on inflation in the US, and hence the higher for longer could become even higher for even longer.
I don't think so. The interesting part is that the theory, that the traditional theory, what we had, that the rising hike in interest rate will bring down the inflation. No, this inflation is not going to go, because all the money which have been printed, that money is not going to go away. So we have to live. We are going to live with the inflation, because anytime you see a scenario, they can bring down the inflation by hiking the rates, but at some point, if they stop it, again, there'll be upsurge in the prices of commodities and dollar index will weaken. So I think this inflation is not going to go away for the long period of time. And we are not going to see, until we have a scenario that the major withdrawal of liquidity take place and market absorbs it. It's not going to happen. So the traditional theories are not working anymore.
Okay.
It's a market full of irrational exuberances, and hence gold should do well.
Okay, but what about open market operations? Sorry, Shweta, just one last question from my side.
Kartik is hijacking this bulletin.
RBI has said that it might, undertake open market operations. Do we see that happening in the US also to contain inflation and liquidity?
US is right now in a big fix. They cannot afford to, increase if the surge in bond yield is going to create problems for the government to service their debt. So that is one side. And if they don't do it, then again the liquidity will drive inflation. So they are in a big fix right now. So what they are doing is they are just saying higher for longer, higher for longer, higher for longer. It's not going to be. Whatever they've said, it has never happened in last 3-4 years. They said inflation is transitory, inflation is permanent. So my narrative is that the rate hikes are not going to continue going forward. And we are going to see a complete U-turn, dramatic U-turn in the first half of 2024. And hence, I'm not expecting, I think bond yields will peak out at some point, and gradually you will see dollar index also declining and bond yield also declining.
Okay, so what happens to people who are waiting to buy gold at this point? So hoping to buy at dips, is that likely? Will the gold prices go downward anytime soon? Because festive season is around the corner. A lot of people are waiting now to buy gold.
My message is don't wait, because we don't know what is going to happen. So maximum downside is what I'm saying is a $50-60 downside base case on the downside scenario. But the potential upside is going to be huge and humongous. And there's going to be all the central banks. Just give you one data. The last 10-year average of central bank buying gold was 400 tons. Last year, central banks bought almost 1180 tons. This year, it will be somewhere between 800 to 900 tons of gold. Recently, with the falling gold prices, central banks were buying gold. So I'm very bullish on gold. Central banks are buying. Why we are not buying? So don't wait for the correction and buy.
Okay. And if one is to buy gold, what route should they take? Physical gold, paper gold, or
SGBs?
I think gold ETFs, sovereign gold bond scheme. Sovereign gold bond scheme is the most preferred one if you are a long-term investor for 4 years, 5 years horizon. It's the best tool we have in our country. Second would be the gold ETF, and the third would be you buying a physical gold.
All right, Kunal, absolute pleasure listening to you. I think the bigger message there is if you're waiting to buy gold, buy it now.
Wait no more.
Wait no more. Go ahead.